Hi, I'm Whack.
Hi, and I'm Pat, and this is another episode of the Weekly Orbit, where we discuss all news and give some opinions about Rocket Pool for the week of Friday, November 17th. Whack, before we get started, are you okay sitting in just that one chair?
No, I've actually got multiple chairs, because I need to diversify my chairs. Yeah.
What about microphone? Is that one microphone
I've
okay, or
got
do you need more?
one microphone here, one in my phone, one in my laptop, three microphones at least. I think with my camera, four microphones. Yeah, that's microphones diversifying.
Do you just have one monitor that you trust?
I got two monitors right now, so yeah.
There's no second best.
No, they definitely are. Well, yeah, I think the first best, we can definitely disagree on that, but there's definitely our second bests as well. So, yeah.
Just a reference to Michael Saylor the other day, and it's just a matter of time before the internet does its thing and there'll be memes going around. I'm sure there probably already are of him and his latest podcast. He makes for good memes.
Michael Saylor, who now has made $1 billion on his Bitcoin investment.
True.
Yeah.
I think his cost base is like $4.5 billion, and he's up to 5.5 total.
That's right. But if he had gone into ETH instead, he would have been way up, even more than that. So, yeah.
That's right. He could have had more. But
yeah.
We're going to talk about Rocket Pool, enough of Bitcoin. Yeah. So let's share my screen, and we'll start off with some stats. And we'll go with the deposit pool, and we've had a pretty decent November so far. Total, we're up at 10,117 for the month. If we look at the weekly, we've had about 8,474 for the week, so that's pretty good. And we break it down by day. We had a really good day on the 14th, 5,330. The 15th, another 4-digit at 1,448, and another 1,000 yesterday. So what's the reason for the increased deposit pool this last week? It looks like we're doing well compared to the prior weeks.
Yeah, we had a couple of good node operators coming online who kind of ate into the deposit pool, and then our bots were just kind of eating that up. So they were minting rETH and to kind of balance the premium and just filling up the deposit pool as well when there was not even much of a premium to have. So it just shows that there's a lot of demand for rETH out there, and we just need there to not be a full deposit pool all the time for that demand to be kind of like used up. Now the question is like, how much demand is there out there? That's the main thing, and I don't really know. I've not really seen too many good numbers about that, but I'm definitely curious to see like how we can keep growing our rETH supply.
Yeah, definitely.
And by the way, here's the second chair that I have as well. It's just in short now.
The second chair, yes. Diversify. You should have at least 3 or 4.
Yeah.
Onto RPL price. So we had a real banger week last week. In one day, we went up almost 25%, I think.
Yeah.
And what goes up must come down a little bit. Traders then take their profits. We started at last week on the ETH ratio. We are at 0.0155, and we are now down to 0.0141. So a little bit down on the ETH ratio.
Yeah.
On USD price, we started at around $32.49 last week, and we are currently at $27.49. So a little bit of a sell-off for the week, but that Ethereum's gone down as well. Do you have any thoughts?
Yeah, I think if you click to the 14-day chart, you get a little bit better idea of what's been going on. And maybe even the 30-day, actually, like that might be the best place to have a look at. So what you can see here, there was a strong upward trajectory over the last pretty much 3 or 4 weeks before this week, that we had a wave up, and then we kind of like consolidated for a few days, and then we had another wave up culminating in like last week's euphoric gains. And since then, I think, the markets as a whole have kind of cooled down a little bit. And that's what happens with RPL, right? Like it outperforms ETH on the way up, but then it also kind of outperforms ETH on the way down, if that makes sense. So like it performs less, it holds up less well than ETH does on the way down, unless there's, some bigger narrative happening or something like that, in which case it holds up better. But I think this is just like normal market cycles. If you just take a little bit of a step back, like we just did with this chart, you'll see that it's still pretty much, a trajectory now is upwards. It's an upward trajectory. And I think sadly, because there's not much of a staking narrative right now, and not particularly like a RPL specific narrative at this moment in time either. That just means that we're kind of going with the market forces, and I think that's what will keep happening until some kind of either wider staking narrative emerges, or we get some kind of if we get some kind of like RPL specific narrative. And thankfully, there might be a few of those coming up in 2024. So
Yeah.
something to look forward to.
Yeah, if you look at the 14, so on the week we're down 15% in USD terms, but on the 14-day up 17 and change, 30-day up almost 44%. So it's been a great 30 days so far.
Absolutely. Yeah, it's been good.
All right, on to the next chart. This is a nice chart put together by Harpocryptes. It explains the amount of collateral RPL staked versus borrowed ETH. And this chart has shifted most recently with the upward price of RPL. It looks like the majority of node operators are now at 10% or above, which is good. We still have quite a few over 50% collateral, but the median, for those listening, the median RPL, or median staked RPL, I should say, is around 14%. If you just took the average, it's at 23% or so. So any thoughts on this? This is a much healthier looking chart than it was, say, a month ago.
Absolutely, yeah. And if you scroll down a little bit, you can see the chart for the 16 ETH validators as well. And the bulk of those guys are now also above 10% as well. So there are some people who are still below 10%. And, that's a shame because we want everyone to be above 10%. But it's looking much stronger now than it was a month ago. And I think, the 30% or so, 25% increase we've had against ETH in that time, bottoming at 0.011, going up, about 25% since then has been really strong for getting those people above the line. And I think what happens as well is as people get to 8 or 9%, they feel like it becomes more worthwhile for them to top up to 10%. Another thing that could explain this as well is that people might have sensed that there's a sentiment shift in the market now. RPL is cheap. Buy the RPL now to get your validator up above 10%. So as prices increase in the future, then it's likely that you'll be getting those rewards earlier. Of course, as always, there is always downside risk. So if RPL does go down, some of these people would quickly fall under the required percentages again. But I think there's a few different things like factoring into us going above that 10% number for most of our validators now, which is really great because this is where we want them to be. I think, about a month ago, there was a position where we had around 30% of our node operators were under collateralized, and that, leads to negative sentiment. It's a bad experience for users, and it just has lots of negative consequences. So hopefully, we can push more of those node operators up above 10%. For some of them, sadly, those who are around the 5% mark will need a 100% increase in RPL ratio for those people to then go above 10%. So there's a long slog ahead for the people at the very lower levels of this chart. So for them, it's going to be harder. But I think these next few months, hopefully, we'll get everyone above 10%. That's my hope.
And the next reward period is less than a week away, depending on your time zone. It'll be Wednesday or Thursday, I believe. So it's really important for those who are right on the edge. This month, perhaps you get rewards, whereas last month they didn't. Or maybe you're right at just below 10%. You can top it off, and this month you can get your RPL reward. So this is a nice chart that
we'll be talking about something in a little bit that kind of impacts this as well. So, yeah.
Indeed. Okay, let's go move on to some news. This last week, there's the DevConnect conference in Istanbul, Turkey, and there was several posts on Discord showing some members of the community there. Of course, this is Langers giving his talk on the IP 4788, that's scheduled to be in the Dan Kuhn update. And so he gave a little talk about that. I'm just going to go through the slides here. Our friend of the pod, Eric Ken, he had a nice talk. He was hosting I think it was a client diversity talk. And here's a link that if you want to listen to Ken and his talk about that. Marceau, he posted a little seminar hosted by NodeSet. They were very prominent there at the conference. And then finally, we had some fun too. Here's a post by Wanderer, along with Grant from the team. And who's the one on the right? Do you know?
That's Nick.
Nick.
He's
Okay.
Wanda's co-founder with
Oh yeah,
NodeSet.
Nick S.
Yeah.
Yep. So they're out on a boat, seeing the sights, and then of course, lots of cat pictures. Istanbul is known for their cat population on the streets, and some nice pics there of some felines. So, any takeaways from DevConnect from your perspective, Whack?
Yeah, people who went had a blast from everything I've gathered so far. People just loved Istanbul. They had a great time in the city. People loved the cats. Anyone who's even like a 1% a cat person was just in cat heaven. Everyone was raving about the cats. But in terms of like the content of the talks and the different conversations that they were having, I think people really enjoyed that as well. They felt like there was some really good conversations happening. There were really diverse set of events going on. You know, Eigenlayer had an event, staking. There were lots of staking events. There were events from different core teams. Of course, you know, there were the actual DevConnect events going on. Even Lido had an event as well. ETHStaker had an event. So there were whole lots of different interests that, you know, there was something for everyone. If you're interested in Ethereum, there's something for everyone there, which I think people really enjoyed, and they had a really good time with that. So everything that I've heard so far has been like, you know, raving about Istanbul, and I'm really sad that I wasn't able to go. So yeah, but that's okay.
Yeah, one thing that was missing, I was surprised I didn't hear an announcement about the new Rocket Pool website. I thought it was going to be deployed during the conference, but
that's what
I
we
just
were
checked
hoping
it,
for.
and it's still on the old one. So maybe
we haven't really heard any reason why that worked out the way it has. Maybe, you know, there was some issue on the back end or something where they weren't able to do it or deploy it. But I was hoping that it would be deployed at the beginning of this week, just so people could kind of like see it while they're at DevConnect. But I guess the team has other plans.
Indeed. Okay, on to the next thing, the votes. We've talked about this last couple of weeks. Four our PRIPs have been voting, and now they are all closed, and they all passed with flying colors. They had the budget update, RPIP 10, that passed with about 92%. Deposits under the minimum, RPIP 28, that passed with over 99%. In the RPL staking rework, RPIP 30, passed with almost 91%, which is it's really great. That could have been really controversial, but kudos to those who, like Valdorf and others, really took the sentiment of the community, tweaked the proposal over and over and over again, and it's really fantastic to see. And then finally, the membership selection for the GMC concluded as well. So any thoughts on the proposals that have passed this week?
The results, you know, we kind of knew that they were going to go this way, barring any kind of like freak occurrence, because they were just the early numbers, you know, gave the approvals the strong leads that then kind of became unassailable, and I'm really glad that, you know, they went through without any drama, like hitch free, and now we can start working on them. So staking rewards rework is being performed. So I think I saw that Patches is already working on getting some tree generation stuff going for that. You know, the early parts of this process will depend on like new trees being generated, but then some of the parts of them will need smart contract upgrade that will come later. So you know, that part of it, we'll have to wait for that. The same thing with RPIP 28 is that will also require there to be smart contract upgrades, and then the final one, you know, the RPIP 10, that was just fixing some mistakes that were made before, so that's not too much of a big deal, and that you know will be fixed quite easily. But the other two, there's aspects especially of 28 that, you know, we'll have to wait a while before we can see the fruits of that. But with RPIP 30, we'll start seeing the benefits of that, I hope maybe next rewards period. definitely by the rewards period after that. And when I say next, I don't mean this one, coming. I mean the one after that, like in 5 weeks' time, or maybe in like 9 weeks' time. So we'll start seeing the fruits of these votes like quite soon, and I think that's going to be really great. And what I was alluding to earlier, with the node distribution chart, the collateral distribution chart, like RPIP 30 passing might be a a big incentive basically for some of those node operators who are at the lower collateral levels to increase their collateral amount to get above 10%, because they'll start getting outsized rewards quite soon, and that's of course going to be phased in. So this is really exciting, great stuff. Congratulations to everyone who's in part of it.
The staking rework, that does not require, it doesn't have to be included in Houston. We don't have to wait that long. It can be implemented before the next upgrade.
Yeah, so the way the reward distribution, I think, can start going into the tree generation on rewards night. The part of it that needs to go into the smart contract, I think, will be like the finally just like to ossify everything, and that most likely now will wait until Saturn, because the Houston audits are going to be starting any day now, and no one's done any coding for this. So until then we can start changing things already, because the withdrawal amount is a PDAO setting, I think, or maybe even the Guardian setting. I think it's PDAO setting. Sorry, an ODAO setting. So we'll work the different parameters will be changed. With the PDAO, with the Guardian wallet, and all those things together to make sure that we get as much of the way as we can before it all gets put onto smart contracts.
Okay. All right. So on to some other news. A quick post here by Jasper. Arbitrum is doing a huge incentive drive over the next couple months, and this is a post by Silo Finance. But I think pretty much any DeFi application you're using on Arbitrum is going to have incentives and you get extra ARB tokens. rETH will be part of that. So if you're an rETH holder, check out Arbitrum. Of course, do your own research before using any of the protocols. You could use one of the DeFi protocols there on ARB and get some extra tokens for it. So pretty cool.
Yeah, absolutely. These protocols are flush with cash. So right here, Silo are showing that they're going to be, over the next 12 weeks, 3 months, they'll be giving $1 million, basically, well, $1.2 million, I think now, based on our prices in incentives, which is a huge liquidity boost. That'll attract a lot of liquidity going onto Arbitrum. And like you said, a lot of other protocols won these grants as well, and were able to get this money coming in. Except Lido, so that's cool.
Yeah, I know. That's a good... another DeFi announcement, Compound, one of the oldest money market protocols out there, has passed a proposal 192 that will add rETH as collateral to their CWETH version 3 on Ethereum mainnet. So rETH has become ubiquitous within DeFi now. It's on all the major DeFi brands, and it's up there. Just you see ETH, you see USDC, and then rETH is so common.
Yeah, it's wonderful just how many integrations we've managed. This was the last big one that was outstanding for rETH, and now it's here. I think a shout out should go to Grant, because a few months ago we saw a forum post on Compound that was written by Grant as a proposal to add rETH, and it's taken a while, but I think that is kind of the root of this. I might be making a mistake, so if I am, please someone correct me, but I think some credit goes to Grant for this, so I'm going to say congrats to Grant. But
Yeah.
Otherwise, this was the last big one, and now that we've got the Thanos gauntlet has got all the different DeFi protocols with rETH now, so that's really, really great to see. We're going to carry on growing. The great thing that's happened is, this has all happened with very few incentives, very few bribes, any of that kind of stuff. Almost all of this growth, if not all of it, is organic, and it's done a really, really wonderful to see that, these protocols are integrating rETH, because by every single metric, it is the most decentralized, most permissionless, most trustless, most staker diverse, most node operators. Every single metric you can think of, rETH is the gold standard. There's no second best,
There's no second best.
except in APR, in which case there are some that are better. But let's not talk about that. But hopefully, we'll be fixing that next year as well. So this is just great to see that we are still growing. We're still getting these integrations, and long may it continue.
Yeah, and with the ODAO reduction in what they're receiving, more of it is going to the IMC, the Incentive Management Committee. So in terms of those incentives, which we really haven't been doing a ton of compared to some protocols, the IMC has an increased budget over the next, the rest of this year in 2024. So
forever,
yeah, forever really. So that's great. We're going to see some more growth on DeFi.
Yeah, IMC's been doing great stuff, with the limited amount that they have, and they're definitely punching above their weight. Like, our ETH liquidity is fantastic considering the amount of spend that we have. So that's all great, but we're going to do so much more. So it's awesome.
Okay, so on to the final item for the week, and it's a big one. Lido has come out with a blog post talking about their community staking module, or CSM. This is their, it's on their roadmap to become more decentralized by taking in individual node operators. And this has a lot of potential impact on the staking community. There's a lot here. Why don't we start out with the TLDR and then we go into more details. I know you were pretty hot about this in yesterday's show. So why don't you take us there and explain to our listeners what it is and what's the potential impacts on Rocket Pool specifically?
Yeah. Okay. So just looking at it on surface level, you see that the Lido, they've said for a while that they want to try to make their node operator set slightly more permissionless, and they had this idea of adding modules, like in their version 2 of Lido, where they'll be able to have modules of different ways of operating stake. And now one of those modules is that they're talking about here is something called the CSM, the community staking module. Now what this means is that people will be able to bring some STETH to Lido. They'll use that as a bond, and then Lido will give them 32 ETH for them to spin up a validator on Lido's behalf, and then they'll get rewards from that. And then when the time comes, they'll the rewards that they get from that will be as STETH also. And then when the time comes that they want to spin down their validator, they'll spin that down and they'll get their 4 ETH back, and they'll be on their way. So on the surface, it looks kind of like a competitor for something like Rocket Pool, which is kind of what they're going towards. They even mentioned Rocket Pool a couple of times in this post. So talking about how it's the permissionless standard, and it's like radically permissionless and all that kind of stuff. And they want to incorporate some of those features, but they're making design choices that are going to potentially be like monumental in the wider space, and it's getting quite a lot of people, like, their attention has perked up quite a lot. And like even Anthony Sassano on yesterday's or Wednesday's episode of Daily Gwei said that Lido are performing a vampire attack on solo staking. I, like you said, was quite passionately quite riled up, let's just say, about this proposal. And here on this page, this was a week ago, so it kind of flew under the radar a little bit, and it was only brought to my attention yesterday when people started talking about it in the Rocket Pool Discord. Pateris brought it to our attention, but a lot of these people were kind of just like patting themselves in the back and just being like, yeah, great job, Lido, like, this is going to be really great, and like blah blah blah. But there are a couple of things to pay attention to. One of them is, Lido think that this is a year away. They're also planning on starting it as a small percentage of their stake, with it potentially growing to a comparable size to where Rocket Pool is now, about 10% of what Lido's staked amount is, their TVL is. And then they want to, the I think what I did was, when I was talking about it in Rocket Fuel yesterday, was I kind of took this proposal to maybe like the next step in its development that, was not mentioned by Lido but can kind of be inferred. And then I took it a step further than that, and then I took it a step further than that to just kind of chart out what this might look like for Ethereum. And it paints a really bleak picture, basically. And I said that in quite strong terms in my show yesterday, that this is potentially catastrophic, basically, for Ethereum and for any other liquid staking protocol out there. As we're talking about other liquid staking protocols, Rocket Pool included, of course, but here there's Miko, who is part of the Diva team, and spoke really strongly. He said, I want to signal a strong disagreement with this, and then the points that he makes is basically this is Lido being a monopoly and Lido using its monopolistic advantage to crush everyone else in his path. So Miko talked about this really strongly, and I strongly agreed with a lot of Miko's points, and it's kind of scary. So there's work to be done from Rocket Pool, from other staking providers, to see that this is what Lido are doing, and now what can we do in response to that? Like, is there a way that we can survive with this system coming from Lido? And with Rocket Pool, we have brand identity, we've got longevity that we've built up over 2 years now. We've got all these great DeFi integrations and everything that we talked about just a minute ago. So with Rocket Pool, we can adjust and adapt in a way that maybe younger, newer protocols like those who haven't even launched yet, like Diva, will definitely struggle in a way that maybe Rocket Pool might not. However, we want to build a suite of strong decentralized staking platforms, LST providers, and while Lido was saying that they will be adding to this, I think what might end up happening, or what they maybe what could happen if we're not all very careful, is that could come at the cost of every other liquid staking provider and every solo staker. So, Lido even in response to Miko here, if you scroll down to the bottom, the person from Lido, right, if you keep scrolling down, when Miko said this, actually just a little bit above that, when Miko said that, if Lido self-limited, then this wouldn't be an issue. This would actually be welcomed for you guys to distribute your stake across more permissionless node operators. Just the last paragraph of this post that you've got on screen. And then Miko replied by saying, this topic is already discussed. We already voted on this. We're not self-limiting, basically. And he points to the forum where they voted 99% in favor of not self-limiting. So this is where we stand right now. And, we've got a year as a community to think of ways to fix this. That's within Rocket Pool, that's within other staking services, that's within solo staking, that's within Ethereum as a whole, and people are already starting to talk about it. So I really want to be part of those conversations, because this is something I feel really strongly about, and I think we'll hopefully make some really good decisions over this coming year, and we can mitigate the potential horrific consequences of something like this.
Yeah, I think some of the details, if it worked out, would be the APR a node operator would make using this CSM would be higher than a solo staker, right?
Oh, it'd be double a solo staker.
Yeah.
It'll be double a solo staker, and it would be maybe, depending on how the modeling works out, it's not set in stone yet, but potentially 25 to 30% higher for Rocket Pool node operators. Another thing would be they wouldn't need a token to do this. And a few weeks ago, I was talking about this, about how starting a new staking service is so difficult without a token. However, that wasn't counting for Lido, right? Because Lido already has such a huge amount of stake. They've got billions of dollars of money that they can throw at this, at making this a success. And they can just incentivize every step of the way until no other staking, no other way of staking can compete with what Lido are doing. And then they'll swallow everything. In my show yesterday, I used the example of Walmart, about how it ate Middle America, and like every small town's local economies were gutted and replaced by Walmart. And this that's happened over and over again, right? Wherever there's a monopolistic entity, they don't stop until they feast on all their rivals and anything in their way. And that's the thing that is really scaring me, and was led to the passion and the anger that I had in yesterday's episode. And now, since then I've kind of moved, today I'm more like, okay, how are we going to fix this, right? Like, I let that anger get in the way, and now it's like, how do we fix this? And thankfully there's some really, really cool people who are spending a lot of time thinking about this, and they're really smart, and I'm fairly sure that we'll come up with some good stuff. So in the end, this will end up being a nothing burger, but unless we take the right steps now, it definitely won't be a nothing burger.
Right. Yeah, and a lot of times in markets, economic concentration is just it naturally happens over time. In this case, it's like everything in crypto is just so accelerated, and I wonder how the Ethereans will react to it. Is this something that they're going to let the market play out? Is competition enough to prevent this from becoming catastrophic, where STETH dominates 50% or more of the market? Or does Ethereum say, we're going to put some safeguards in place in future upgrades to address this?
The thing is, that will then impact the credible neutrality of the Ethereum network.
Right.
There's downsides to every point that you can make here. I hope that we all can somehow fix this without like it going towards the worst case scenarios. And the worst case scenarios, there's elements of that are already kind of showing themselves that it could happen. And I'm kind of referring to things like, core dev team capture, where the core dev teams are working with Lido, right? Like, if you just scroll up a little bit, there's
I saw Nimbus
one of
on there.
Yeah, on this same screen, keep going a little bit more, a bit more, sorry. No, wait. See, look, there's a Nimbus team. So there's Zachary from the Nimbus team. Nimbus team, of course, is a consensus layer client. People who work with Nimbus are core devs, right? And they're already looking to work with Lido here. And a lot of the core the teams, like the core devs development teams, they already have relationships with Lido. So at that point, can you say that they've been captured? Can you say that, if the situation came where the community wanted a hard fork, and all the core dev teams and the execution layer clients and the consensus clients are all part of Lido ecosystem in one way or another, getting money from Lido, will they put their interests first, or will they put the interest of Ethereum first? That's a worst case scenario. I'm not saying that, we're at that point now, or that is, the path that we're going to go down. However, you can see that is not out of the question completely, which is how I'm seeing it. Maybe I'm wrong, but now's the time to, if we were sounding the alarm a few weeks ago about the 33% thing, now's the time to, get the firefighters on the fire truck and mobilize. You know what I mean? Step it up. This is more than an alarm. This is now where we need to take action. But this is scary. This is really, really scary. And the fact that Lido's tendrils are in every single DeFi protocol, in the core dev teams, in everywhere across Ethereum, that is what really scares me, because they've been able to build themselves in a way that they're potentially cancerous. They're potentially cancerous. So yeah, I was trying to be a little bit more upbeat today about this compared to the episode yesterday. But at the moment, this is not something that we can take lightly. We have to work on fixing this.
Yeah, well, I think there's definitely an awareness that's been built over the last few months, and I think this is now we're going to have that discussion and see what if anything we're going to do about it. So that wraps up today's show. Thanks for watching and listening. So until next week, Whack, we'll see you, and take care, everyone.
Bye.